Hello everyone, this is Zach. It is 10:25, 10:26 p.m. Eastern on the 1st of March. It is a Saturday night right now. Markets are closed, so I think it's a perfect time for me to hop on and do a quick analysis slash rundown of what I've seen the market do over the last few days and my interpretation of that. We've been selling for the last few days, and I'll talk about what gave me the indication that we were going to start selling from up here, and what I think is a few possible scenarios of what can happen over the next coming days. So, first and foremost, how would I define myself as a trader? I am a market, like an auction market theory slash balance and expansion theory slash Wyckoff theory trader. They're all really the exact same thing. It's just different forms of interpreting how markets are engaging with uh, areas of value and whether or not they want to stay within those areas of value or expand away from them to new areas of value. Once you can interpret what phase of rotations markets are in, you can find locations to take good cheap trade entry and hopefully get into like a larger move. So what I did here is I deleted all of my levels, and I undid all of the merges on this chart, and I'll just start merging from scratch. So what I mean when I say merging is like these are profiles that represent a single day. Each one of them is one day from 9:30 a.m. Eastern Time to 4 p.m. Eastern Time. And when there's overlapping days, a lot of them, what I'll do is I'll merge those days and turn them into one. And then I can view those days as one auction, one balance zone. So I'll give you an example. A great one is right here. This day, this day, this day, this day, we're all overlapping. So I can merge that, and merge that. And now it all looks like it's one day. Well, it's 4 days. Um, but I can interpret it as if it's one day or one zone really. So I'll just do that quickly for a bunch of them. Let's see. Like all this stuff in the back, although it is important, it's not relevant to making trade ideas anymore because once there's too much overlapping value, I'll just start looking at these areas. So because these have overlapped, see, like they overlapped here, and then they relapsed, overlapped again, and then overlapped again, and then overlapped again, overlapping again, and this is overlapping again. I'll start taking like the local areas now. And then this profile right here is like everything that's happened. So yeah, it's very subjective how you get these levels, but I'll just go through how I'm going to get them, and you guys will be able to see my thought process and hopefully apply it into your own trading. Let's reset this entire thing. And before I even get into this, I do want to note this is by no means my strategy or my something. What I mean is like this isn't something I created myself. I've learned this through Dalton and a couple of friends of mine. Um, they've been very instrumental in helping me figure out an edge in the market. So, yeah, by no means do I want to like pitch this as if I'm some genius that created this. I did not. I'm very grateful for the people that helped teach me this stuff. And if you ever want to reach out to me, I'll put my uh, I'll put my Discord name. Actually, my Discord name is right here. Nasdaq Zach, right there. Just add me, send me a DM. We can chat. I don't mind. Let's see. Okay, so I'll begin getting some levels. I'll merge from here, begin it here, and I'll end it there. all of that. See, like now that's one big profile. You know what? I'll even throw this one in there, and then I'll merge from here to there, and I will merge. Let's see. Now you might be getting a little confused on like why I'm merging all this. It really doesn't matter what you merge and what you don't. Um, as long as they're kind of overlapping, you get a general idea, and you'll see the peaks and valleys in the volume profile and the market profile, and that's how I'm gonna get my levels. So we merge that, and then that was down, and then see this day, and this day, for the most part, overlap quite a bit. So we'll merge all of them. We'll begin it here, and we'll end it there, and that's a merge. And these days are overlapping. Oh well, this is actually not a day. The second last profile on my charts, and this only applies to the second last one. So this is the last. This is the second last. You'll notice in most cases, the second last profile on my chart is always going to be lowercase letters, whereas this is uppercase letters. That's because this is pre-market. So I only have the pre-market, the extended trading hours session turned on for the previous day and not any other extended trading hours. So yeah, so I don't really count this as a day. I'm not too concerned about it. Okay. So really, the only context I'm concerned about is like local price action because we've had so much overlapping. So what I'll do is I will try to find areas in which there's peaks and valleys in these profiles. What I can see here is that there's nothing too grabbing me by the face in this specific profile. This one has a few of them, but I'm noticing a lot of them are overlapping. So what I can do is, and by the way, these are levels that the ones that I'm about to draw right now are levels that I had on my chart on Thursday night, and like let me pull up a screenshot. Do I have any? Um, let's see. It was yesterday was the 28th of February. Yeah, I do have a screenshot. Perfect. You can see I have a level there at 59.75, at 900, at 12, at 17, at 88, and you'll see how I'm about to get those levels again. So let's quickly try that. So I can see that in this profile right here, the larger one, there's this big node, this big, almost like bell curve of volume. I should really get a pick pen. Do I have it? No, I don't. There's like this curve of value right here. And what I interpret this as, this like bell curve, is this is value, and as it grows larger in the middle, th these are the areas where the market participants are most willing to engage in trade. And because of that, um, I don't know which participant is really more likely to be in charge here. So what I'll do is I'll look for the shelves. I call them ledges. The ledges in value, where there's a big drop off in in like the size of volume traded. So you can see there's clearly one here at 59.75, or you call it 60, it doesn't matter. I'll just call it 59.75. And there's a big one right here at 12.75. And there's a few in between, but the ones in the middle aren't as important as the big ones on the very edge. So let's see, 59.75. Let's mark that. It was 59.75. Let's make that a dotted line. Let's copy a duplicate and let's put that at 12 and a half. Okay, perfect. And let's see if there's other ones that I find interesting. Extend these out a bit. And I guess I kind of find one interesting at like 32 and a half. So I'll mark that as well. And 32 and a half, there we go. And what we'll do is now we'll go to like a regular chart. Let's go to a 5-minute chart, and you guys will see how these levels have been interacted with during Friday's session, and how we could take some trade off of them. Let's see. Where's the volume profile? Let's hide that. Okay. So this is a 5-minute chart on the ES S&P 500 contract, and as you can see from the screenshot earlier, this screenshot was taken on February 28th at 10:54 a.m. and 8 seconds. That's how I have my screenshots coded. So at 10 a.m., at 10:54 a.m., these are the levels I had drawn: 59.75, 925, 12.75. I didn't draw a few of these clearly. However, that doesn't really matter. What's important here is this one. And one of the ones up here, 12 and a half. Okay, I had it 12.75 yesterday, but 12 and a half, same thing really. It doesn't matter. We'll move it 12 and a half, 12.75. This is a level that I drew the night before, and look how it interacted with the market. Now, this should be blowing your mind. Look at the pre-market. You'll find that most of these levels you get from using the volume profile, especially like a larger time frame volume profile, are really spot on with pre-market levels, and there's a big correlation between those, and you can kind of validate the strength of your profile level using the pre-market levels. So let's go to a 1-minute chart now. You can see we got some rejections here, some of that, some of that. Now, more seasoned auction traders will know what this setup right here is. This one especially. This is what Wyckoff calls a spring, a UTAD, I believe, a spring. A UTAD is an upward one, but it's basically like a false breakout, and then it fails to hold, and when it gets back inside of the range it tried breaking out from, it causes so much people that got trapped down here to reverse their positions, as in exit their positions. Their short positions now have to become longs to exit, that they cause the market to squeeze all the way to the other side. And often the squeeze all the way to the other side is so large that it can form another breakout. And this is a perfect example of one. Now, I would have known that this level defines my balance, aka my volume node, right? If we get a breakout from here downward, I'm looking to play short as long as there's volume indicating there are short sellers in the market. Now let's go to a 1-minute chart, get more drilled in. This is the break right here. Happens at 1 p.m., 1:15, something like that. Here we are, we're testing the level. We're testing the level. We break down, we flush down, right? Why don't we even, let's have some fun. So that's it. And let's look at it on a footprint. That is at 115. Perfect. Okay, so you'll see my cursor. There we go. As we flush down, you can see we get a big spike in volume. Right there, you can see it, and you can see it right here. So this is on the left, delta, which is the difference in the bid and the ask. Well, market orders that hit the bid and the ask, and this is just pure volume. And you can see as we broke down, look at all the volume we're getting. Nice, right? And then the next candle, underneath the level that needed to break, which is this. Let's make it even larger so it's easier to see for us. Let's make it like a 5. There we go. As we broke below this level, we need to show the market makers that there's interest in engaging in trade below the balance, below the value. If there isn't interest, aka volume, the market maker is not inclined to move price in that direction. The market maker has no care for whether price goes up or down. All they care about is transactions. They make money based on transaction fees. So their job is to facilitate as much trade as possible. So they're only going to take the market in directions where there's most participants willing to engage. So when we're coming down here and no one is willing to engage with the market, this is telling the market maker right here, um, you know what, like, we don't really like these prices. We were more comfortable up here, right? So as we're breaking away, look, there's volume, then a drop in volume. Where, like, look at that. Where's the volume, right? And then you can see as we come down here, there's a lot of absorption right here. 1,300 contracts traded right there, minus 500 delta. So that's a lot of selling. But look, we're getting a lot of selling here. But is price moving? We're getting a lot of selling right there, minus 380 on 930 contracts. A lot of selling, like a lot of sellers putting pressure. There's another one right there. But is the price going anywhere? No, right? The price isn't going anywhere. And what that tells us is there's someone passively absorbing on the bid. So someone's passively buying. Whenever someone's hitting the sell, someone's buying it from them. And what that tells us is there's someone that's like, anything at this price or lower, I will buy it. If they're willing to buy it and sellers aren't willing to press it more down here, over here, this is going to get absorbed back into the range. And if sellers get absorbed back inside this level, this 58, what was it? 58, 59, 75. If they get back inside this, as we said, these sellers, everyone that sold here, is going to panic and have to let go of their position. And when they let go of their position, what causes a short seller to cover sorry, what causes a short seller to close their position? A buy, right? A short can only close their position by buying. So if these sellers become buyers, they will actually cause the squeeze in themselves. So you can see there's a lot of selling, it's not going anywhere, and then volume is pretty dry. Okay, there's our absorption push. There we go. And as we come back inside, look at that. We're coming back inside and look at the volume profile of this candle, right? Popping up. Look at where the volume is coming in. This is beautiful, guys. Like, this is a textbook example of a false breakdown, a look below and fail. See, we looked below and we failed, so now we have to go through again. You could have taken the trade down here, but you need to have balls of steel really to do that. I don't I don't trade down here. I don't catch the knife as well as I could. I do see a lot of these things, but it really takes a lot of like balls to catch this trade. One of my friends, Rizzo, is really good at catching it. Good for him. I don't have the account size to be doing that right now. What I do is I see the absorption happening, and then I'll wait for that to happen and then use candle structure to find an entry inside of it. I'll use like an anchored VWAP or a 9 EMA. So you could like throw an anchored VWAP at the low and look how many opportunities they give you. Actually, not that many here. But okay, that's beyond the point. You can still use the 9 and 20 EMA. But quite often, actually, the anchored VWAP will give you great opportunities as well. It depends on where you anchor it, but yeah, let's forget about that for a second. As they squeeze up, you can see, okay, they're squeezing, and then in here, you can see that they they're covering their positions, right? You could take this trade. Sorry, I got cut off there. Let's say you take the long at a new 1 minute high, right? I'm actually more aggressive than that. Like, I'll buy the level before the confirmation, but you can do whatever you want, really. That's beyond the point. We're talking theory here. All I want to teach you guys at right now is how to interpret this stuff, and if you can interpret it correctly, you will find ways to trade around it, defined on your own like emotional capacity to trade, like psychological capacity to trade. So let's say we take the trade on a new 1 minute high right there and stop right below. Dude, 1 to 1, 2 to 1, 3 to 1 right away you'll get. And if you do get the full rotation, you should get, like, if you really are aggressive with your targets, you should be able to get like 6 to 1 about on this trade. So you could try this trade 6 times and be wrong. No, sorry. You could try this trade 5 times and be wrong. And on your sixth try, if you get it right, you're fucking green. Like, isn't that amazing? And once you know, like, guys, once you know what operation the market maker is doing, you don't need 6 tries to get in. It might take you 2, might take you 3. But when you get in, you're gonna get in risking, like, what's the risk here? 66 to 59. You're risking 7 points here. That is a lot, actually. Unless you think of it from the lens that you're making 60 points in return. You're going from 60 to 112. That's 60. That's 50 points. Is it 50 points? 52 points, something like that. Right? So you're risking 6 points to make 50. Is that a lot now? No, it's not. Right? But you guys are getting so caught up in the weeds. Like, you want to trade. What you're trying to do is you're trying to buy this, and then you're trying to sell it here, and then you're trying to short it here, but you take a stop, and then you try to short it here again, and it goes for a bit, and then it hits your break even, and then you try long it here, and then you take a stop. And guys, you're getting lost in the weeds here, right? See what the market maker is doing, understand the operation, and if you can do that, you can take a few losses and still get a big move. I know a lot of traders that took this trade right here, this one. I'm telling you guys, I didn't trade on Friday, um, but I'm telling you guys, if I was at the market at the time, if I was at my screen at the time, I would have bought right here. I would have bought right there. I wouldn't have even waited for the confirmation because I'm okay with taking like 3 losses, 4 losses before I even get one right because I know I'm only risking 2 to 3 points each time, and if I get one right, I'm up like 30 points, 40 points. I'm not concerned about taking losses. Like I'll take 5 losses in a row and keep trying. What you guys think trading is about is like being right. It's not. It's about understanding what's happening and then eventually just finding spots to get in, and one of them will work. If you keep your risk tight, like you're good to go, right? So I don't want to make this seem like I'm telling you guys what to do or anything, but a lot of traders are getting lost in the weeds, and you're probably one of them. Um, and if you use like auction market theory, expansion theory, and stuff, you can really find great trade location. Like even the breakout. Now let's go to 5 minute. Let's expand the 5 minute actually. Okay, so we had the 5 minute, right? Let's make this normal again. Okay, so that's our target. Let's say we get long here or there. That was the target. Even if you took off some in the middle, you're fine, right? Now, you could try shorting it right here. You could try shorting it here, right here. And if you did, um, I wouldn't have done it, but if you did, I wouldn't call you a bad trader. It's cheap. It's cheap price location. If you had candle structure, try it. Whatever, right? If you take a loss, what is it? -2 or 3 points. You're trying to make 40. You're gonna be fine, right? But a lot of the traders that are using these levels, we're looking at this zone as something of a breakout. And once they got signals of a breakout, they probably tried taking it long here, or here, or here, and took a bunch of stops. But eventually, when they did get it, it makes up for all their 2 3 point losses, right? So, like the important thing I'm trying to highlight here is that your level is more important than your level, and your understanding of what's going on with that level is more important than um, the entry signal. If you can understand what's going on, you can kind of just like force your way into the market if you have good enough risk management, and you'll win. Like that is how most big traders trade around the market, is they understand the auction process, the phase of the auction process, and then they just know how price action looks, how it's going to be tricky, how extreme dips back to levels get bought up. Like I can guarantee you a lot of traders were sitting on the bid here. Well, actually, I don't even have to guarantee you. I can probably just show you. Um, yeah, there they are. There they are. Right. So, like, what more can I even say about this? I don't know. This video is almost 30 minutes now. I am going to stop ranting. Yeah. Okay. Well, peace out.